watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. I'm Angela Miles. It's Friday, December 26th. Thank you for watching this very special edition of First Business. Coming up in this show, the stocks the pros plan to own in the new year. Find out which companies made the cut. Plus, a look back at the moments that shaped 2014 in the business world. And say it isn't so. As the year comes to a close, so does our show. Stick with us for one last session. First Business starts now. Well, it's time now for Trader Talk. Matt Shapiro, president of MWS Capital, is first up with his market forecast. And Matt, good morning. You have been bullish on the stock market and bullish on the American economy. Will you be a bull in the new year?
Well, I'm feeling really good, and I think it's a time to position yourself for 2015. You know, this year has been marked by some spikes in volatility, even though overall people did okay. But I think a lot of investors were kind of like, well, you know, January started off bad, then we kind of did well, then there was a sell-off in October, and then the oil thing, and, you know, people a little bit have had it. But remember, with employment and the oil price tax cut, growth is going to be very good. It's just a matter of how strong sentiment's going to be. So, you know, I don't think we're going to have a gangbuster year, but I think, again, when you look at each other at the end of 2015, stocks will have put in a 7 to 9% year.
Thank you, Matt. Dan Deming joins us now. And Dan, you tend to be more cautious, let's say, about market action. What are key areas of the market and the economy you intend to watch in 2015?
You know, it's going to be interesting, Angie, because right now you are seeing some disconnects in the marketplace, and I know no one really knows how that's going to play out, what's going on in the oil sector and how it's going to kind of filter into the high yield sector right now. You're seeing a credit spreads really widening, more so than we saw in October. So if there's a cumulative effect there, that could not particularly bode well for the first half of next year. But ultimately, if you look at the economy as a whole, you see the economy continuing to expand here in the United States, and we can maintain that trend and see some of this credit concerns wash out of the market, then it's certainly probably a very good buying opportunity.
Thank you, Dan. Well, my great colleague Chuck Coppola is standing by this morning with more of a preview of what to expect in the coming year. Good morning, Chuck.
What will happen in 2015? The direction of middle-class wages could hinge on a big labor contract up for renewal. Commodities may have a stabilizing year, but we begin with cheap oil and its continuing influence on commerce. Analysts predict cheap oil will soon lead to takeovers and price breaks.
2015 really could be the year of the energy takeover. This low price in oil will put a lot of producers under stress, and there will be a lot of big oil companies looking for opportunities to buy some of these guys out.
As far as a noticeable dip in airfare prices, I think it'll be spring, you know, late winter into maybe mid-spring of 2015 when we start to see before we start to see some pretty aggressive sales for sort of the beginning of the summer travel season.
In other commodities, corn plantings will likely be down by as much as 2 million acres. Soybeans, though, up 2 million acres.
2015 might be more of a stabilizing year, setting the stage then for what I think will be some higher prices in late 15 and into 2016.
Jack Scoville of Price Futures Group says coffee is expected to go up.
There's still a chance for a shortage of production against demand. As that manifests itself, we could see the market start to return back to higher prices, perhaps after the first quarter of next year.
And Mark Niemanoff thinks the dollar will become weaker by about 5% from current levels, and other currencies stabilize, encouraging trade.
Well, I think at some point you're going to see the yen and the euro currencies start to stabilize against the dollar.
And the middle class, still slipping further behind top earners, should take great interest in the United Auto Workers negotiations.
It's a big industry, it's an important industry. If the United Auto Workers break through and negotiate some significant pay increases, could set a standard, could push the field, at least in manufacturing, towards higher wage increases. That'll have a trickle-down effect.
Farmers are indicating fewer acres of corn will be planted in 2015, but soybean plantings could rise 1 to 2 million acres. Cattle herds will grow 1%. Pork and poultry producers expect about 3% growth.
Now on to consumer spending trends in the new year. Greg McBride at Bankrate.com joins us. He's joining us by Skype this morning. Good morning. And Americans, Greg, have become better at handling credit cards. Will that trend continue?
Well, I think we're slipping slowly back into some familiar habits, Angie. You know, as the economy gets better, as people feel more secure in their jobs, They want to spend a little bit more. They've got frugal fatigue, but a lot of people haven't seen a pay increase. And so we're seeing use of credit start to pick up a little bit, people using that to kind of bridge the gap between what income isn't providing and yet the spending that they want to do.
What about interest rates on credit cards? Will credit card companies be kinder to Americans?
Now, I think 2015 is going to be a year where you see a couple of things. For consumers with marginal credit, it's going to be more of the same. You're going to see those credit card rates inching up. And then the thing to watch in the back half of the year is if the Federal Reserve starts to lift interest rates, then card rates for everybody are going to inch their way higher also.
Greg, thank you, and thank you for being a great guest on our show.
Always a pleasure. Thank you, Angie.
Technology is often the first one through the door to the future. And tech analyst Rob Enderle says that the Consumer Electronics Show in Las Vegas, historically a gadget wonderland, this year will feature more wearables for consumers as well as more robots and drones for business and home.
First, we're going to be up to our armpits in robots. Everybody and their brothers bringing out robots at all levels and all areas. We certainly saw Amazon during this Christmas season bring out a whole series of robots to replace full-time workers in a lot of their warehouses. So that's a big trend, and that's ramping up. And CES mostly will be about those cute little robots that run around the house, including drones.
Enderle adds that real-time translation will advance, allowing phone calls around the world to be translated while callers are still on the line. Homes equipped with software to manage environments will be, quote, smarter than ever. And cars will deploy smart windshields to guide drivers, and 4K technology will be a bigger deal for PCs and monitors than for those looking at large TV screens.
Business owners who are ready to take the next big step and raise serious cash for their startups are facing a struggle. The SEC has been slow to finish up laws allowing companies to get investors by the masses. Kai Sisson reports from Capitol Hill.
I'm Dan Weber, president of AMAC.
When Dan Weber founded the Association of Mature American Citizens, he had no idea that in just 7 years, his company would grow to 250,000 members. But as Weber looks to expand and apply for an initial public offering, he is unable to because of regulations from the Securities and Exchange Commission.
Because of restrictions in the SEC under Section D and 506, there are too many restrictions, so we can't get the capital that we need.
Rule 506 of the SEC's Section D prohibits companies from raising capital from anyone other than accredited investors, basically outlawing crowdfunding through the general public. Companies then need to raise an enormous amount of cash through other elite investment sources, which economists say is unfair to small businesses.
Right now, we have a situation where you literally have to spend, according to the SEC's own numbers, $2.5 million to access the public capital market, and then $1.5 million in lawyers and accountants each year. That's an insurmountable barrier for most small businesses.
Weber is committed to going public, and his top priority is seeing his customers own the company.
And one of the things we don't want to do is to get a big fat investor to take over our organization. We want our members to own the organization, and the regulations prohibit us from having our members buy stock.
Daniel Gallagher is the commissioner of the SEC and has been outspoken on the need to change these regulations so companies can grow more efficiently.
But sadly, we at the SEC are not doing nearly enough to ensure that small businesses have the access to capital that they need to grow. As an SEC commissioner, I believe that this issue warrants the agency's highest level of priority.
The Jobs Act, signed by President Obama in 2012, did alleviate some of the restrictions on small businesses, but what the SEC is out to fix is how to protect the public from shady investments while lessening the hurdles for entrepreneurs to raise capital. Outside the Securities and Exchange Commission, for First Business News, I'm Kai Sisson.
Several states, including Wisconsin, Michigan, Washington, Colorado, and Texas, have passed laws making it possible for startups to raise money through online crowdfunding. Still to come, billionaire boom, why the 1% is on a solid winning streak, plus top performers, which stocks rocked the market in 2014, and who has the better investing instinct, men or women? Find out next. But first, final thoughts about First Business from traders.
First Business has been something that I've really enjoyed doing, and it's gotten me to think over the years, and hopefully we've done something good out of it.
Well, I've been with First Business since it began, and I can tell you they provide a great service for the community. I like the hours that they come on, what you have provided, and it gives so many people a chance to talk to you, the public. With that, I wish you all a Happy New Year and the best to everybody at First Business.
Not only did the rich get richer in 2014, the gap between top earners and the middle class has never been wider. A new Pew Research report specifically notes that high-income families saw wealth grow by 7% during the past 3 years, while median-income families saw no growth. Taking a longer view, the wealth of the country's top earners is double what it was in 1983. For middle-class households, there was no change in that 30-year period. Wall Street Journal research reveals that the wealthiest 10% own about 3/4 of all U.S. wealth.
A roundup of the top stocks of 2014 has some surprises on the list. Investor Place tallied the S&P's best performers of the year. Number 1, Under Armour, with shares nearly tripling since January of last year, followed by hotel chain Marriott International, enjoying the surge of travelers. Number 3, Royal Caribbean International, with year-to-date returns of 65%. Delta Airlines flies in fourth with returns of 66%, and in fifth place, Momentum stock, Keurig Green Mountain Coffee. Rounding out the rest of the top 10, Avago Technologies, biotech company Allergan, Edward Life Sciences, video game company Electronic Arts, and Southwest Airlines.
And when it comes to investing, a recent study finds women are outperforming men. A 5-year study by the Financial Times finds hedge funds run by women returned an average of 82.4%, while those run by men returned only 51%. Kathleen Grace, a financial advisor and author, explains why women may be wired to be better investors.
Women tend to, and this is part of his study, have a more awareness of their emotional biases and can learn to sit back, gather the data before they make the decisions.
Only 3% of hedge funds were actually run by women at the time the Financial Times study was conducted.
Plunging oil prices, unrest overseas, and GM's massive recall are some of the year's other major headlines. Joining us now with more on the top stories of 2014, Kevin Paul Scott, co-founder of Addo Worldwide. Good to have you here.
Hey, Angie, good to be with you today.
Well, one of the top stories has to be oil.
Yeah, certainly. The oil is huge because prices have been plunging. And retailers are especially excited about this because as consumers have extra income in their pocket, extra cash on hand, they're spending it increasingly in restaurants and retailers, which has made them very happy to close out the year.
It was also a big year for General Motors and that recall over the ignition switches. How did that company fare?
Yeah, GM cannot wait for 2015. It was a tumultuous year, but under Mary Barra's leadership, GM has taken an approach of being increasingly transparent about the problems. They've issued a lot of recalls, but they are certainly ready to turn the page and say, we're ready for a new year with GM.
It was a great 2014 for Apple, the company winning in court and releasing that iPhone 6 and those new iPads. They were big hits with consumers.
Certainly, and Angie, and the iWatch. So this was the first major new product for Apple in a number of years. So between the iPads, the iPhones, and the new iWatch, Apple is really turning the page and continuing to maintain their presence as the dominant force in technology this year.
Thank you, and Happy New Year to you.
Happy New Year to you as well.
Coming up, tune in for one last Unplugged. We say goodbye to our fan favorite Traders Unplugged. What the guys have to say about their favorite moments with us. And as we go to break, Trader Talk about First Business.
It's been a great opportunity, like I said, to come on here and speak with you, have some fun, talk about the markets, and really, again, you know, it helps me gain perspective on the markets as well when I come on here and I'm able to talk to your viewers.
As somebody from Chicago originally and on the exchange floors for many years, a Chicago-based show, we were all very proud of it. And as I say, it will definitely be missed, and it was an honor to be on the show many, many times throughout the years.
Tolls for our final Traders Unplugged. Joining us from CME Group one last time, Alan Nuckman and Scott Shellady. Round one, guys. Will there be 2015 reasons to be a bull next year?
Not 2015, maybe like 8 to 10% reasons. I think we'll probably see some more QE out of Europe. probably something more out of Asia as well with both China and Japan. So it's going to be tough to stand in front of stocks, even though I don't think they should go up any higher. We're going to, because we're going to get a bump from those
So you're
two
bullish.
geographies.
It's taken me a long time, but now you're bullish. You're bullish. I like this.
I'm not bullish, but I'm telling you what's going to happen. I don't agree with it, but that's what's going to happen.
Well, that's what people, they want to know the direction. They don't care why. They want to know how the market's going to move.
All right, there you go. Tell them what you think, Mr. Bull.
Well, you know what I think. I think we're going to have
Dow 25,000.
Continued gains, and we're looking for 2,500 in the S&P.
It was only last year that Alan found out there was puts. It's always been calls, but you know they're puts.
Gentlemen don't trade puts.
Right,
that's an
there we
old
go.
saying.
Round number 2, as we wrap up this year, name your best money-making play of the year.
Bonds. I was long bonds from the beginning. It's outperformed equities like nobody's business, and I still think it will next year again. Don't forget the world is in a deflationary cycle, and we're racing everybody to zero interest rates. Bonds are going to be the play, and it'll be a lot safer.
Technology. Nobody believed it could happen again. Technology, innovation. Either you live in the future or you live in the past.
This was your play last year.
Live in the future and live in the past. Technology, QQQs.
This was your play last
year. The NASDAQ.
You played this all year last year.
I told you the whole time that tech is going to continue to run.
I was the only one that said we'd go below 2% last year, and we did. So.
Round number 3, First Biz Faves. Name your favorite subject or moment on Traders Unplugged.
Oh, they're all my favorite.
This one's my favorite because it's the last.
It's not over yet. You don't know that.
Wow,
you
that was
think
harsh.
it might be. You think it might be, but it's not. It's not over.
If you had to stand next to him this whole time, you would have said the same thing.
Happy New Year!
On to your bonus round question. First Business is owned by Weigel Broadcasting. How many years ago did Weigel first air a business show? Was it 1, 20 years ago? I'm sorry, was it A, 20 years ago, B, 35 years ago, or C, 47 years ago?
47.
20.
47. Absolutely, I win. I put it all in. I put every bet we've ever had.
I don't know the answer. I'm guessing.
I put everything in on this one.
Obviously, you've talked to her before the show.
Well, I know the answer.
All right, there you
I've been to the website.
Okay.
The answer is 47 years. Weigel was the first, a precursor to CNBC, as a matter of fact.
Oh, excellent.
Thanks, Angie. We love you.
Thank you so much. I love you guys. It's been wonderful. Thanks for all the entertainment.
No problem.
First Business continues right after this.
It's really been a pleasure being able to join you guys and share my thoughts and ideas, and to be given the opportunity to do that on such a regular basis. It's really helped me grow into a role here as a commentator for equity options and the equity options market, and has really helped us get our name out there. And again, we really, really appreciate it, myself and everyone at Option Hacker.
Talking to you guys, you look at the market and you take a complicated situation and make sense out of it. Present it to people that they can understand, because not everybody's a sophisticated investor. We all kind of want to know what's going on in the market, and First Business has always provided a good look at that.
Thanks for having me on in all these years, and it's been a good run for all of us, for all investors out there that really stuck to the course, and it's been an honor to be on and to try to give you my advice that just to focus on the fundamentals, focus on the long term. Don't follow the trends, but follow your instincts in your heart, and you'll be a winning investor.
The time has come for us to say so long. On a personal note, it's been my pleasure to anchor and report on First Business beginning in 2005, and since July of 2011 to host and manage the daily content of this show. It was my mission to level the playing field between Wall Street and Main Street. I wanted to make a difference through education to give the general public a fighting chance to enjoy the same returns on investments as those who trade on the floor, or even big bankers who work in corner offices. I am pleased to say First Business has been graced through the years with top professionals in the financial field who were eager to share their very best insights and information. And I'm thrilled that both sophisticated traders and Americans buying stocks for the first time have become loyal viewers. Staying true to my mission, I am compelled to leave you with final lessons. No matter how simple the investment, do your homework first. If something sounds too complicated and doesn't make sense to you, don't invest. Know your risk before buying any stock or property. If you can't withstand a loss, steer clear. To young Americans, start investing now. Time is on your side. To middle-agers, stay the course. And to some of you, it's never too late to start again. To our seniors, you are prime candidates for con artists. Double check before you invest. And finally, to my colleagues, Chuck, Colleen, Paige, Mariko, Malcolm, Bill, Amy, Carlise, all who have freelanced on our show, and our executive producer, Harvey Moshman, thank you for your hard work, your team effort, and your friendship. First Business launched in 1989. In TV years, that's a good long run. Thank you to the Shapiro family, and especially the late Howard Shapiro, for making that possible. And so, for the final time, from all of us at First Business, thank you for watching.